Stocks struggle for direction. Trump impeached for the second time. Following a decline during the previous session, Wall Street stocks finished marginally higher on Tuesday, with investors being cautious ahead of the earnings session. Fourth quarter earnings will come into focus starting Friday, with results from big banks launching the reporting season. Still, U.S. stock indexes stayed close to all-time highs as market players hope for a rollout of vaccines and a big boost to public spending. As such, the benchmark S&P 500 index gained just 0.04%, the Dow Jones Industrial Average gained 0.19%, and the Nasdaq Composite added 0.28%. In Asia, equities were mixed on Wednesday amid cautious optimism about additional U.S. fiscal stimulus. The benchmark S&P ASX 200 index in Australia erased early losses to finish 0.11% higher despite rising coronavirus cases in the Australian state of Queensland. The Japanese market also recovered after a weak start, with the Nikkei 225 adding over 1%. Meanwhile, China's Shanghai Composite shed 0.27% during the session. European markets finished slightly higher yesterday, with deal-related gains for French grocer Carrefour and Spain's Telefonica, offsetting worries about the extended coronavirus lockdowns. The Netherlands has extended a lockdown into next month, while German Chancellor Angela Merkel said another 10 weeks of hard measures might be needed. The Pan-European Stock 600 ended up 0.17% higher, with telecom stocks climbing 1.1% to lead gains. Elsewhere, ECB Governor Christine Lagarde said that the December economic projections were still very clearly plausible, with forecasts being based on lockdown measures until the end of the first quarter. She added that some of the uncertainty has been cleared, such as Brexit, the US election, and the vaccine, and the start of the year is more positive than some would argue, Lagarde noted. In currencies, the USD index kept gyrating around the 90.00 handle on Wednesday, trying to resume the recent upside following Tuesday's negative price action as yields in the US 10-year benchmark remain high. As such, the Euro-USD bumped into the 20 DMA and retreated back below the 1.2200 figure, while the USD Japanese yen turned positive following a bounce from the 20 DMA, but failed to overcome the 104.00 immediate resistance. On the data front, headline U.S. inflation was marginally stronger than expected on a yearly basis, coming in at 1.4% versus expectations of a 1.3% reading. Core measures of CPI were in line with expectations at 1.6% year-on-year. Of note, Fed's Clarida highlighted overnight that the central bank won't raise rates until inflation achieves a 2% goal. Meanwhile, in its latest Beige Book report, the Federal Reserve noted that most districts said activity increased modestly, with almost all districts seeing price increases compared to the last report, while wages increased modestly but generally remained weak. U.S. stocks were mixed on Wednesday as investors awaited news on another round of stimulus support from the government. Meanwhile, the House voted 232 to 197 to impeach President Donald Trump for incitement of insurrection. As such, Trump has become the first president in U.S. history to be impeached twice. The Dow Jones Industrial Average dipped 0.03%, the S&P 500 rose 0.23%, and the Nasdaq Composite gained 0.43%. Elsewhere, oil prices climbed to nearly one-year highs around $57.40, but failed to preserve gains and retreated marginally, finishing just below the $56 handle. Despite the correction, sentiment in the oil market remains buoyed by Saudi Arabia's oil output cuts. Besides, traders continue to bet stimulus and vaccines would fuel an economic recovery. Meanwhile, the U.S. Energy Information Administration said in a report on Wednesday that U.S. crude oil inventories decreased by 3.2 million barrels during the week ending January 8th. On the negative side, total motor gasoline inventories increased by 4.4 million, while distillate fuel inventories increased by 4.8 million barrels last week. In other markets, Bitcoin prices extended the recovery from the ascending 20 DMA that continued to act as significant support. The Bitcoin US dollar bounced from the $32,000 $200 area, having exceeded the $38,000 figure early on Thursday. The next upside target arrives at $39,000. If the digital coin manages to retain its bullish bias in the short term, the $40,000 psychological handle will come back into market focus. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.